Hello, everyone, and welcome to another European VC podcast. I am David, and as you know, I'm joined by my co-founder and co-host, Ondrej. Today, we have Ondrej Bartos with us. Ondrej is a founding GP at Credo Ventures, a 75 million euro seed stage venture fund in Prague and a bit elsewhere to back Central Eastern European tech startups, of course, with a global ambition and kick-ass teams. Credo are investing out of Fund 4, with a total of 250 million euros in AUM and an established portfolio of 60 companies or so, and notable investments including, well, the famed UiPath that you all know, ProductBoard, PriceFX, Resistant AI, and 11 Labs, among many others.
As 2023 draws to a close, join us for a landmark virtual roundtable with the true OGs of Europe on the evolution of European venture capital. Mark your calendars for this pivotal event on January the 29th. This is your exclusive opportunity to hear from some of our founding figures of the European VC scene. We're bringing together a panel of industry OGs to dissect the transformation, current trends, and the future of European venture capital. Yaron Vala, founder of Target Global, one of Europe's few firms that count their AUM in the billions, will enlighten us on the evolving VC landscape and the emerging challenges and opportunities. Chris Wade from Isomer Capital, as one of Europe's true OG LPs, will dive into the intricacies of venture capital strategies in the changing economic climate. Kerry Baldwin of IQ Capital, as one of the most influential investors in European venture and early deep tech pioneers, will shed light on the tech-driven transformation of the venture sector, offering invaluable insights only few can give. Learn about the European VC history, current trends, strategies for success, and how European venture capital stands apart globally. This roundtable is a must for VCs, limited partners, and entrepreneurs alike. Don't miss the chance to hear from the best in class. Go to eu.vc, navigate to the events section, and register to be a part of this transformative event. And also visit EUVC for more details and to secure your place in the future of European venture capital.
If you're listening in and love our show, do drop us a review, follow the pod, and subscribe at eu.vc.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So, Ondrej, before I ask you to tell us about your journey into venture, I want to just settle a dispute, and it's not but one between David and me, but between many in the ecosystem. Credo or Credo?
Okay. So, hi, guys. I'm buying time. I don't know. Both count. It's a similar question as whether it's Ondrej or Ondrej. I actually answered to both. And similarly, Credo or Credo answers to both.
How would you say it in Czech, though?
Well, it's not a Czech name, but...
yeah, right. It's Latin, right?
It's kind of Latin. We thought it was just a cute name to have. I think we started with Credo mostly, and now we settled at Credo. We might go back to Credo. It's,
But that's very smart of you. It's like you can just revamp your brand identity with new colors and stuff, and also change how you pronounce it. I like that.
I say Credo because I was such an Assassin's Creed fanboy when I was younger, and I just remember that game every time I think about your fund. It's not a bad association in my brain, at least.
Good to know, David.
With that said, now, Ondrej, please tell us your story about how you got into venture.
I got into venture a long time ago. And actually, so I've been a VC for over 18 years now. But the story started earlier than that. I think the first time I heard the term was in the late 90s. And then I got closer during the dot-com bubble when I was a part of a movement called First Tuesday that nobody remembers anymore, but it was like a series of networking events, and sort of an ecosystem builder, early ecosystem builder, I got very interested and fascinated by the world of venture. So I was reading, books, and I was following blogs, and I was following especially the US and UK scenes. And, eventually I became a VC in 2005 when I started my cooperation with MCI, which was a Polish venture fund.
And Ondrej, you have a very non-Polish nor Pragian way of talking, meaning you sound very US. Do you have a US background as well, just for our audience?
I do not have a US background. I think it comes down to watching too many Friends episodes.
You've been in deep mourning the last couple of days then.
Yeah, I've been sad. Yeah.
We've been, we were, to the audience, we're recording this shortly after what is Chandler Bing's real name? I can't remember.
Matthew Perry.
Yes, Matthew Perry, yes. So I disrespected.
Okay, Andreas, the real name is Chandler Bing, right?
Yeah, exactly. Yeah.
There
then
you
he
go.
had the second personality, yes. That's probably it. All right. Amazing. Now, Ondrej, I want to take us into asking you about your pivotal moment in your life and how it has shaped you as an investor. And maybe this is even Credo's life, because I think the two of you are just as intertwined almost as Chandler Bing and Matthew Perry.
As we've already learned, one of my pivotal moments was when I discovered Friends. In such a long career, I can think of many pivotal moments, like almost indefinite number. But I guess I can mention a couple. I think one is definitely around ambition, and that one would be connected with Avast, one of the first big success stories coming out of this region. I've been friends with Avast founders for a long time, all the way from like the 90s. And like the pivotal moment was when I realized how successful Avast actually became when they acquired AVG, became a multi-billion-dollar company, and they achieved it, from their Prague office, from their Prague, dark den of an office. And it was pivotal because I saw it was possible. I saw it in reality that it is possible to build amazing companies from Prague, not Silicon Valley, not the US, not the UK, but Prague. Another pivotal moment, I'm sure, was my first unsuccessful investment, the one that failed completely and was 100% write-off, just because it helped me sort of shape my relationship to risk, and it taught me how to accept failure, which is very important in venture. And then, like, more recently, our investment in the UiPath and the success that followed was definitely pivotal for both me and Credo, also for the whole CE region and Romania. It was just pivotal on many, many fronts.
I couldn't put it better. I think it was, and even for the way people look at the region, right? Now, Ondrej, I'd love to take us to the Take a Stand section.
Take a stand.
Ondrej, I'd love to ask you to comment on the following statement by Sean O'Sullivan from SOSV.
Entrepreneurship, it's a blood sport. The founders are constantly battling in the arena, and ultimately the majority of them are not going to be successful.
I agree. I agree. Like, I mean, I started as an entrepreneur myself. I never made it big. I never had any notable success as an entrepreneur. But I did go through it, and I did spend those several years of hustle and roller coaster of a ride and sweat and blood, I think, when I was just trying to make things work, and I was pulling all-nighters and 120-hour work weeks with mixed results. Sometimes a little bit of success, sometimes a complete failure. So I think this is correct, and I went through it. I remember it, and I think it actually makes me a better VC. I believe the fact that I've been through it, and yes, I never built anything close to a unicorn, but I do remember the tough beginnings, so I can relate.
Can I ask you, Ondrej, and we had a conversation about this at How to Web at the Q&A stage, because we were talking to a couple of emerging managers there. So I want to ask you, and it might be slightly more controversial than answering yes, being an entrepreneur is a blood sport. How about venture? Being a VC, is that a blood sport?
Oh, yeah. Yeah. At the end of the day, it's a lot less sexy than it appears. It's a lot more of hard work and less of cool parties than, what it appears. It's a tough business. Like it's a business with incredibly long feedback loop. So, for most people, it's just painful because you don't see the results, and a year passes by and 5 years pass by, and you still are not the Michael Moritz or the super successful flashy person. You still kind of struggle, and you're still not sure if this gamble will pay off or not. So I'd say totally, yeah.
Yeah, because I thought when I asked the question that there's two sides to it. There's that one that you just touched on now, and there's also another side, which is collaboration versus competition, VCs amongst. And I think we tend to try and say that we're all collaborative and we high five when we meet at events, and we even hug, I think, many of us. But in the end, there's also competition between firms. And especially, I think, if you're a smaller firm and less successful firm, you might not see it as much as someone like in your position, because I think people that would try and get money from you would also try and get money from Seed Camp or from Early Bird. And you're all three big boys, and you're very successful. So I'd love to ask you that relationship between VCs and maybe especially the tier one VCs of seed stage investing in Europe. How do you see that, and how do you navigate, and how do you think about it?
Well, I mean, you're right. I mean, you know your stuff. It can get pretty competitive, especially on the deals that are considered hot, right? Or deals in what's currently considered hot space. We've been in competitive situations with both Seed Camp and Early Bird, and with 100 others, out of which I guess I don't know what you guys consider tier one, but with tier ones as well. And sometimes we won, sometimes we lost. I'd say, no, I'm not going to do stats for you. Sometimes we lost, sometimes we won. I personally try not to get too passionate when it comes to competitive situations. At the end of the day, even some of the hottest deals turned out badly, and some of the completely cold deals turned out great. So I usually try to calm everybody down and and get more to, the collaborative mode, or if that's not possible, then, try to be a bit fatalist there. We actually lost the deal last week in a very competitive process, but hey, it's not a success until it exits. That's the important. I feel like some of, especially like the emerging VCs out there, are spending way too much energy and sort of mental capacity on, fighting for getting into deals, as opposed to then helping the companies and, lead or guiding them towards successful exits. Writing a check is the easy part, right? It's, you wrote a check, but then what now?
Do you think it's also kind of because of the way just venture works, such long feedback cycles, and for an emerging VC, like first fund or second fund, like the best proxy that's kind of available there, aside from their own like past track record, of course, is, well, we are in this deal and these big names are also joining or joined after or whatever, right? Do you think it's just kind of a byproduct of the way the industry works?
I think so. I think it is a byproduct.
How do you navigate that with your less senior team members? Because you're saying you try to always put ice on the, whatever the expression is in English, I can't remember now, because people get passionate and excited. Oh fuck, we lost that deal, man.
Well, I mean, as I said, I'm trying to cool everybody down. How exactly? Like sometimes it works, sometimes it doesn't. Sometimes people get so passionate and excited about a deal that it is almost impossible to cool them off. But that's life.
Sorry for using this phrasing, but did hitting it big with UiPath change anything in how you think and act as an investor when it comes to this rivalry around deals? Some people would say, well, it was transformative once I made the money that I need to make. Since then, my outlook on life and how I work with others have changed.
I'm pretty sure it did change me in many ways. To be quite honest here, I haven't spent much time, self-reflecting on, what exactly has changed and how. If you mean that I might have become less hungry, how dare you, Andrea? If you mean that I'm wiser, then yeah, that sounds about right. It's definitely changed me. So in this context, in UiPath, I have seen many very competitive hot rounds, which I had the luxury of not having to fight for, because those were Series B, C, D, E. I don't even remember where it stopped. But pretty much all of the investment rounds after seed and extension, which we did, all of the follow-ons were super competitive. So I could make my popcorn and sit and watch all the big brands and tier ones fight to get in. And so I guess this alone has changed the perspective a little bit.
How do you think then? Because knowing that this is the trajectory of a portfolio company that really shows the right metrics, and having seen that yourself, how does that change how you think about communicating around your portfolio publicly? Because I run around calling myself the LP hype man, right? So I hype everyone up, and there's typically room in the in a GP investment or in an LP investment. So for that reason, it's not a big problem for me. But if you have someone hitting the stride like UiPath, you're maybe not in a rush to invite everyone in by also letting the world know that they're doing amazing.
I have two perspectives on this. One is I have never been much of a hype man myself. I've, ever since our first fundraising of Fund One, I've been more on the side of, guys, this is huge risk. Think twice. I'm not sure you want to do this. Like, we might lose it all. Like, actually lose it all. So I'm always more on the side of trying to manage the expectations and, be on the cool, cold side rather than hot. My second reaction is we at Credo, and I think I can speak for Credo as a firm, are very founder centric in many, many ways. We started as a founder centric, founder friendly VC firm, and we've always tried being one. And a part of that is also that we are pretty much leaving this up to the founders to decide. Daniel at UiPath was a very transparent person, so he shared the metrics with just about anyone on the way, and he just believes that he can always sort of outperform the expectations and forecasts and everything, and he did. There are other founders in our portfolio that are very secretive about the performance numbers, and we completely respect that. We try to guide them, we try to being the sounding board, and we tell them advantages and disadvantages of both approaches, but we never are the drivers for hyping something up. I guess this is the Eastern Europeans in us.
Yeah, instead of being the LP hype man, you can be the GP icebringer. Whatever you want to call it.
I like that. I like it.
You like
I
it?
think
Okay, cool.
It's called Water Boy, isn't it? Isn't that what
Waterboy. Please don't.
Ondrej, one final question on the note of competitive rivalry. Do you ever see dirty tricks being played? And if so, can you speak to them saying how can you poison a deal? How can you poison yourself as a firm? What are red lines for you? What if you always thought this we do not do? And maybe what do you do, but no, it's a bit dirty?
You know what? I don't think I've seen many, if any, really dirty tricks. Like, I mean, I've seen like competitive situations where, VCs were trying to like take the whole round or too much of a round, not making space for, friendly VCs or, Credo in particular, claiming that they need a certain ownership, which I knew was bullshit because they have taken less in the past. So, but I wouldn't necessarily call those dirty tricks. It was just what they wanted to achieve in that particular deal. And I don't see anything like fundamentally wrong about that. I want to say we are trying to be very collaborative, but everybody says that. I made myself laugh about that, dirty PR trick of mine.
It's an important feature, right, of being able to laugh about ourselves. It's very healthy.
Also, we add a lot of value, guys.
Yeah, but let's do it. Let's do a 90-minute session just on value add from Credo.
We do not follow hype trends, right?
Never.
Never. Ondrej, on a separate, different note, but building on that, I'd love to ask you to share with us, Fund 4. It's been a hell of a ride. I'm sure there's much more to happen and to come. What would you say have been the let's call it the first principles in building the firm, or in maybe a funny wordplay here? What is the firm's credo?
Funnily enough, the firm does not have a credo.
Credo is a musical thing, right? Am I not right in saying that? It's something
Credo is belief. It's what you
Belief.
believe in.
The core belief of it.
Yeah. It comes from Latin. And it's in Portuguese. That's why I know so well. We use it still at church and
Nice,
stuff.
useful.
I've always tied it to credibility, but that's also
No, it's a very deep belief that you hold very close to your values and core.
So listen, like we don't have like a formalized credo. What I would think is closest to that is, what I've already also mentioned, which is the founder centric approach. To us, this is all about founders. We don't consider ourselves bankers or financiers, or we don't tell them, but we don't actually consider our LPs our customers. To us, the founders are the customers. Our LPs are just a tool. Again, don't tell them. And so I think we've never formalized it because it was just so deep in the DNA of Credo since the beginning that we've never felt the need to actually, put it in words. Back to what I mentioned a couple of minutes ago, I mentioned the Avast founders and the inspiration that they were for me. The inspiration was about what they've built and what they've achieved and how many people they've influenced on the way. It was never about money. I don't think we've ever thought about how much they made in terms of, how rich they became. They did become pretty rich, but it was never about the money. The money was like a byproduct. So already when we started Credo as a firm, it was never about getting rich or making money. I think there are easier ways to, make money if it's the money that you're interested in. This was about backing smart people, innovative people, people who thought about something really good. That was the inspiration.
Can I ask you though, even though you don't have a Credo, you do have firm building principles, I'm sure. Some that you would say these are the 4 principles if you were an emerging manager.
Actually, you know what? We might have a Credo. I just forgot. But like when we created the first website, we decided instead of a menu that we would have, we support entrepreneurs. We was the about section, support was what we do, and entrepreneurs was the portfolio actually. And we designed it in this way because we believe just that. So I guess it's we support entrepreneurs.
I have a funny story for you because on that note, because Sequoia had that as well on their website.
We might have stolen it, yeah.
Or the other way around. Who knows?
It brought me such a pain because I remember that my first job in venture, I was helping redesign the website. I was like, we're going to do this. And we were really struggling to find a really cool way to write it in a way where I would feel that my integrity wasn't challenged by the fact that I was knocking off Sequoia. So they brought me a lot of hardship just for that. So, okay, but we back entrepreneurs. I like that one. So that's the Credo of Credo. Now, core firm building principles. Ondrej, we spoke at that Q&A stage about how emerging managers should think about going in to build their firm. And now we just spoke about being in VC is a blood sport. And one of the things you said back then was, I slept under the tables in the beginning of Credo. If I should get you started on one core firm building belief, I think it's that venture is built by passion, and it's not something that you come to sleeping.
Definitely. There needs to be the passion for what they do. And again, it's been mentioned already, but because venture has such a long feedback loop, the results come, years after people invest, you need the passion to actually survive, to stay, to keep doing what you want to do. So passion and hard work. There's a lot more hard work than it probably seems at the conferences and TechCrunch articles and stuff. But there's a lot of hard work if people want to be successful. So I guess passion and hard work. What else?
What else? Let's leave it at that. Ondrej, I want to take us to our shout out segment.
Love is in the air, everywhere I look around.
In the shout out segment, I'd like to ask you to give a shout out to a co-investor, an angel, or an LP for being awesome. And with as much detail as possible, of course, do share with us the story behind that awesomeness.
There's a certain unfair advantage because we've just done so many co-investments with SeedCam. But if there's one, at least the one that comes to mind immediately, then it would be Rashma at SeedCam. I met Rashma sometime in 2008, 2009, so at the very beginning of SeedCam. I think we have become friends. I invited Rashma into the advisory board of Credo early days. So in 2010, we established an advisory board, and Rashma accepted. And I think they were the first sort of Western European co-investor that we had in our investments, in our portfolio companies. And they have always been awesome, always trying to help. I also feel like Rashma was among the sort of Western investors. She was one of the first ones, if not the first one, who paid attention to CEE. So, I love Rashma. I've always loved working with SeedCam as a firm and with Rashma as a person. I think that's all I can say. And also, that was the reason. So UiPath seed round was early bird, Credo, and SeedCam. And we actually showed it to SeedCam. And the reason was that we always respected them and liked them as a co-investor. And Rashma saw the potential then and there, and she joined. So another reason to respect her.
I want to ask you about a topic that I've really been looking forward to dive into, which is the next chapters for Credo, and in this also succession, because you are one of the few firms that have in Europe been around long enough to be really thoughtful on this point.
So about next chapters at Credo, so we are currently at Fund 4, so next chapter will be Fund 5, and then the following will be Fund 6. Do you want me to continue?
Yes,
Can you explain that? That's too complex. Come on, let's go slower.
No, but then I can continue it. So Fund 4, 75 million. Fund 5, because you've gone the opposite way. You're not growing, you're getting smaller. So the next one's going to be 50.
And then we're going to end it with a 5 million vehicle.
With the sizes, I'm not sure. The big picture here is, yes, we want to build a franchise. We want to build a brand that will be here when we're not. So, the aim has always been to build Credo as a firm that will go through, a succession. And I will, when I retire at the age of 80, if I'm still alive, I will be reading about the successes of Credo that I didn't have anything to do with. So that's the plan. About the sizes of the funds, so I don't know about that. What I can tell you is that as long as I am with Credo, we will be raising funds that will of sizes that make sense. We want to stay predominantly a seed fund and pre-seed fund. So we want to do the earliest stages of startups, because I feel like that's the DNA. That's what we do best. That's where we feel best. And that means that we will always be raising funds of sizes that just make sense. Currently, it's a 75 million fund. I can imagine, if the inflation continues and, euro or dollar lose their value, we might, the next fund might be, 80 or 90 or 100 or not. Or it will make more sense to raise a $60 million euro vehicle. I don't know that. I do know that we don't want to keep increasing, the sizes of the funds just because we can raise, more money. We don't want to do that. And I think we've proven that that's not the path that we're in.
So that makes perfect sense, right? I'd love to ask you, though, and just a note to everyone, I was looking just before for the exact episode. We put it, of course, in the show notes on eu.vc, but we have done an episode earlier with Ondrej and a couple of others from the Engaged conference, where we also spoke about this decision to not grow fund size just because Credo could. So much more on that there if you want to. Now, Ondrej, I wanted to ask you, because yes, that's the next chapter for Credo, makes sense. Fund 5, 6, 7. But how do you think? So you said, I want to prepare, of course, the firm to go on and be handed down to the next generation, if you may put it like that. When we spoke to Stefan on the podcast from Creandum, he said, well, I think about it as you have boutique investors and you have firms, real firms, and then you have franchises. And when you're trying to build for a franchise, then he described some of his thinking there. I love to ask you, when you are building towards this franchise, what have been your key considerations in that, building up talent? How are you thinking about the requirements for you as a leadership inside the firm?
I'm sure Stefan has done a lot more thinking about this and is probably more structured around this than I am. On our side, the process has kind of already started. So for Fund 4, we brought in 3 new partners. 2 of GPs in Funds 2 and 3 actually left for a bit different reasons, but it's been well communicated, and it was a friendly agreement. So Jan and myself, who were the 2 GPs that stayed, we brought in 3 new GPs. Internally, we call them fresh blood. We don't do that, publicly, but that's actually what it's supposed to be. They're, younger than us, a little less experienced, but still, pretty experienced. I think that summarizes our approach. So we want to work with younger GPs alongside us in Fund 4, most probably in Fund 5, maybe Fund 6. And then when we leave, I hope like nobody even notices, because there will be continuity in the team. And then hopefully new GPs will join in 2040 and I won't even know them. So nothing radical, nothing thought-provoking, or nothing really, really smart. Just, a process.
But there's a simplicity in not over-engineering it as well, and that's probably what I would get as a takeaway as a listener of what you just said there. I think is cool. Let me ask you a different question. Recently, you guys also came to market with a slightly different product. So if I remember correctly, it was a secondaries fund. How does that, well, of course, do share with our listeners that they don't know what that is about, of course, but that's quite quickly explained. But how does it fit into what we're just talking about in building up Credo?
So we at Credo like to experiment. We always experiment with something. We experimented with sending one GP over to Silicon Valley for, 18 months or 20 months. We, decided to experiment with a talent partner as one of the first ones in the region, and so forth and so forth. So we like to experiment. And one of our most recent experiments was this, crossover fund, which you referred to. And the logic behind this was, well, first of all, this was an idea from inside the team. And we always like to listen to what even like the junior members of the team come up with as ideas. And the logic was, it's been a trend of the last couple of years that big hedge funds who were always doing like public investing or investing in public stock, they were coming down a little, and they were doing also private investments, pre-IPO and earlier. Like some of them went as low as seed, like think Kotu or Dragony or Tiger. So our logic was, we already do early stage. Why don't we try to use that experience and go up and start doing, the late stage, private or even like public? And the reason why we should, try to do that is we already research a lot of the late stage and public companies, because when we invest in data observability, we go out and take a look at the universe, being it private, public, whatever, and we try to understand the space. Second reason is, on the way, as an early stage investor, as our companies grow, they very often accept investments from the late stage guys. So we create relationship with those guys. And that's how we might get into deals that previously we didn't see when we started. And also we felt like, so we've never done SPVs for follow-ons for our pro rata. We either took our pro rata or not. We never did any SPVs. We like simplicity. You guys might already know that about me. And so one last reason was to actually have something to be able to do follow-ons in the most successful companies in our portfolio. So we created Credo Crossover 1 fund, which is small, which is $15 million, as an experiment to try this out. And, ask me in a year or two, the feedback loop here might be a little quicker, faster than in the early stages, but so far it seems like the process at least works fine. Let's see where it takes us.
Let's see the outcomes. Yeah. Ondrej, we are short on time now, but I cannot refrain from asking something. As a firm that experiments, you're bound to fail. That's part of it, right? Can you share any failure and or learnings associated to that that is worth for other GPs listening in?
There are just so many failures. So one of our early experiments was, we initiated and funded one of the first co-working spaces in Prague. And that was a really bad idea because co-working spaces in 2011 or 2012 just did not work economically. So, and they still don't. Look at WeWork, right? So WeWork is now worth $120 million. That's That's insane after raising billions. Anyway, so that was one of the failures. We created this program, which I believe was called Starlift, that was supposed to seek internships at big tech, well-funded startups in the US for talented Czech people or Central Europeans. That failed because the arrogant big techs and well-funded startups just weren't interested in the interns. So, I mean, I guess I could go on. Like, so many things have failed and will fail, but here's what you got to do.
Thanks for sharing, Ondrej. I think it's great to also put some light on that and share. It's that testing just leads to failure, and how you talk about it, right? I think it's also an important learning there. Test, try quickly. If you fail, you fail. Fuck it. Next one. Let's keep on trying and iterating. I think that's beautiful. Very much like building a startup. And now, on that note, let's go into the quick fire round, Ondrej. I'll ask you quick answer questions.
And now, the quick fire round. Quick fire.
What advice would you give your 10-year younger self?
Be patient, work hard, work harder. And, if you keep doing what you're doing, the results will come just a bit later than what you expected.
What are your top tips for emerging VCs across Europe who are now fundraising?
My top tip is don't do it. Bad idea. Second tip would be different, stand out. Nobody needs just another VC, be something, build an expertise or, have a unique insight. Then you will raise and you will be successful.
What's the most counterintuitive thing you've learned in your last 18 years or so in venture?
Charisma can be taught. So don't get overexcited about charismatic founders. They sometimes may be bad founders.
So with that, Ondrej, I just want to say thank you so much for joining us, and everyone who's listening in, thank you to you as well. Do make sure to follow the pod on eu.vc and hit us up with a review if you are enjoying it or think you have something great to say.
As 2023 draws to a close, join us for a landmark virtual roundtable with the true OGs of Europe on the evolution of European venture capital. Mark your calendars for this pivotal event on January the 29th. This is your exclusive opportunity to hear from some of our founding figures of the European VC scene. We're bringing together a panel of industry OGs to dissect the transformation, current trends, and the future of European venture capital. Yaron Vala, founder of Target Global, one of Europe's few firms that count their AUM in the billions, will enlighten us on the evolving VC landscape and the emerging challenges and opportunities. Chris Wade from Isomer Capital, as one of Europe's true OG LPs, will dive into the intricacies of venture capital strategies in the changing economic climate. Kerry Baldwin of IQ Capital, as one of the most influential investors in European venture and early deep tech pioneers, will shed light on the tech-driven transformation of the venture sector, offering invaluable insights only few can give. Learn about the European VC history, current trends, strategies for success, and how European venture capital stands apart globally. This roundtable is a must for VCs, limited partners, and entrepreneurs alike. Don't miss the chance to hear from the best in class. Go to eu.vc, navigate to the events section, and register to be a part of this transformative event. And also visit EUVC for more details and to secure your place in the future of European venture capital.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.